let me bring on board Mr. Sivaramakrishnan Ganapathy, who's the Managing Director at Gokaldas Exports, joining us this morning. Mr. Ganapathy, great having you. Give us a sense, what does this relaxation of import duties on cotton do for you? Give us a sense on, quantify the impact for us, sector as a whole and you in particular.
So I think, if I look at it from an apparel standpoint, availability of cotton for India increases. It also sends a signal that, the cotton prices have overheated. For us, a higher cotton price, a higher yarn price eventually leads to an increase in fabric price. And that could have an impact on our costs. So this is a welcome move. It helps in cooling off the runaway cotton and yarn prices. So from that perspective, it is helpful. For purely an apparel standpoint, usually fabric is a pass-through. So we do tend to pass on these costs back to our customers. But a lower prices always helps in improving the competitiveness of India and hence helps in increasing business volume flow to us.
Mr. Ganapathy, hi, morning. Give us a sense of the kind of price movement that we have seen on cotton and how has the rupee depreciation impacted you? Are you able to pass on that as well to the clients?
So the yarn prices, for instance, have moved up. Cotton price obviously leads to immediate yarn prices, which is what we track more closely. It's gone up by about 25% or even higher. And that obviously puts a pressure on the raw material supplies, as I said earlier. But again, we tend to factor these into our costings, and hence we try to protect our margins. As far as rupee depreciation is concerned, it is helpful for every exporter. To the extent that we are hedged, we may not see some immediate gains from a Gokaldas standpoint. The rupee depreciation has been much faster than the forward covers that we took about 2-3 quarters ago. Having said that, directionally it is helpful and it helps improve our competitiveness. Do we have to pass on all these costs back to the customers? It's a negotiation between the suppliers and the customers. Any rupee depreciation always helps exporters from a margin standpoint.
Ganapathy, if you look at how exporters are now looking at, you're already supplying in a term sheet with many of your clients for the supply for the next 3 to 4 months. How has the growth looking like from a value and volume point of view? Has the US market stabilized for you in some way? And the ongoing tariff issue is still lingering for you if it comes back in some form?
So even through a peak 50% tariff, our volumes were slightly on the higher side than earlier. So we have managed to hold on to our business through pretty difficult times. And now that the tariff is down to 10%, we are seeing a fairly good business traction. There is a level playing field between India and other countries at the moment. Post July, when the current Section 122 tariff of the US comes to an end, there is a likelihood that there could be a new higher tariff. But since India is also negotiating BTA with the United States, it's quite likely that India may get a favorable tariff vis-a-vis competitive countries. So I don't anticipate tariff to be a deal breaker going forward. We have been successfully able to navigate very steep tariffs, and hence that gives us the confidence that going forward, we should be able to keep our business momentum strong.
Seen your clients passing on the benefits of the refunds which many of them have got from the US government after the Supreme Court judgment, and is that giving you confidence that even if there's a tariff, the clients will be able to absorb that tariff hike and pass, and still continue with the same volumes?
So there are multiple points here. One is the refund point. The refund was on account of the fact that Supreme Court of the United States held that the previous tariff not kosher, and hence the extra tariff collected had to be refunded back to the tariff payer, which in this case are our customers, our retailers. The money they have applied for tariff refunds, they have not yet got their money. So that's a separate discussion that we will have with our buyers. The understanding is that if they get their refunds back, then we do tend to have a claim. It's quite likely that sometimes the customers may also ask for a claim, claiming that customers paid the extra tariff. So we will have to see how that one settles down. As far as going forward is concerned, if the US administration takes care of all the legalities in imposing tariff, there may not be another incidence of tariff refunds. Having said all of that, I think if the tariff value remains, at the range of 10 to 20%, I think the markets will eventually absorb. US market has so far dealt with high tariffs already, and customers will be able to pass it back to the customers in some form or fashion going forward.
What does that do essentially if that were to come through in terms of the tariff refunds? How much of the tariff were you bearing? What was the component, and what will that do with regard to margins for you?
Oh, so the last financial year itself, we bore a tariff net of what we in turn passed on to our supply chain, which is our fabric suppliers, etc. So I netted that off, and that itself comes to about 90 crores. If I don't net it off at a gross level, we bore tariff equal to almost like 140 odd crores or thereabouts. So to that extent, we will see some benefit coming out of that, because going forward there won't be any tariff incidents on us indirectly, and that will help us from a margin standpoint as well.
I'm trying to understand, therefore, the impact on your EBITDA if this were to translate. Will it be 50 crore? Am I understanding the numbers right? 140 less 90?
No, 140 less 50. So it will be net is 90, I said. So it will be, that net 90. Yeah, the net is 90. Yeah.
Understood. And that's significant because you've done around 360 crore of EBITDA in FY26.
Indeed.
Okay. So that should in fact help you see a jump with regard to margins. And in terms of top line as well, you've got EU, there's a finalized treaty there now. How quickly do you take advantage of that? Is that at all translating? What's the sense on ground?
So EU tariff has not yet been implemented. There's been an announcement, and the announcement said that in about 6 months, the government of India will enter into an agreement with the EU, which then will have to be ratified by the 27 EU countries. So there is a while. It will be a while before EU FTA comes into effect. So I don't anticipate it happening before middle of 27 or perhaps even later. So its impact will be felt more in FY28 and beyond.
Finally, it is estimated that the India-US trade deal may have an 18% tariff. Will that have an impact on you in some way?
It'll be positive. Yeah, it'll be positive because if you look at the competing countries that we have, which are China, Vietnam, Bangladesh, Sri Lanka, etc., they're all in the range of 19-20%. So I wouldn't distinguish much between an 18 or a 19 or 18 or a 20, but we'll all be in the same ballpark. So we'll have at least a level playing field with all the competing countries. That's more than sufficient for us to, play strong.
Capex pipeline, Mr. Ganapathy, for FY27, is it meaningfully lower than FY26? What do you do with the free cash flow?
I'm sorry, are you saying the order pipeline is lower in FY27?
Capex, sir, not order.
Capex. No. That is because we have already done a lot of Capex, and some of those Capexes will materialize going forward. We will also see how, how the business momentum, if we have a very sharp momentum going forward, we may relook at the Capex as well. But a lot of the Capexes that we have already incurred will start playing out in FY27, FY28, and so on.
Does the cash flow go on to repay debt? What do you do with the free cash flow if this Capex were not to translate?
We will use to repay debt. Obviously, we will
Right.
pare down the debt. Our free cash flows will do that. Yeah.
How much, therefore, should the debt settle in at? If, I mean, given the current commentary you're giving, where should the debt settle in at end of FY27?
So that depends on how we are in the process of also amalgamating BTPL, which is a fabric unit, and that fabric unit will also come with its own working capital debt. So we may see a little bit of debt going up on account of working capital debt of BTPL also coming in, since we want to grow that business. But I think from an FY28 onwards, we will start seeing debt falling sharply.
Okay, Mr. Ganapathy, thank you so much for coming in and giving us that perspective with regard to Gokaldas. We've seen a bit of a spike on the stock, of course, on the back of that easing with regard to cotton import duties. But